In this video, I will show you the best stock portfolio for 2026, which consists of the 30 best stocks in the market right now. And I want to make the prediction that this stock portfolio can double over the next 365 days. Now you're probably thinking that this is just another YouTuber that's trying to get attention by making some crazy predictions. But you can literally go to every single video, look at the stocks that I recommended, and you will see that 80% of the stocks are up quite a bit since I published the video. Now if you want more frequent updates on what I'm buying, selling, and holding, make sure to join the Discord. The link is in the description, because I will soon publish my Mr. Invest Excel sheet where I track all the best stocks with their potential returns, and that will give you a great overview on which stocks are the best deals every single day, every single week. It's gonna be free for the first couple of months, so I'm very excited to share it with you guys. So link is in the description. So for a quick overview, my portfolio is made out of 30 stocks across 10 sectors in the economy, and throughout the video I will be sharing which stock of every sector is my favorite and my hidden gem. So really pay attention, because this stock portfolio can change people's lives. And I want to start off with the mining sector, because as you should know, mining stocks are red hot, so it's really crucial to own the best ones in this sector. So the first stock is called Critical Metals Corp, that's going to mine rare earths in Greenland with processing in Saudi Arabia and the United States. And just so you know, they will be mining in Greenland. It's not depending on US buying Greenland or something. The recent move where the company signed a $1.5 billion joint venture with Saudi Arabia to build massive rare earth processing plants is truly massive for this company. On top of that, 100% of the finished materials from their Saudi processing plant are already signed to the US military. And this is the best part. The company keeps 50% ownership stake in the Saudi plant, but doesn't have to pay a single dollar for its construction. And that is another massive win. And out of all the rare earth mining companies, this stock has the most potential. And it sounds crazy, but it's very likely that this stock is not going to 2x, but 10x within 5 years. So you got to own this in your portfolio. Just as a side note, apart from Critical Metals Corp, you have two other major players, which are MP Materials and USAR. I mentioned USAR a little over a month ago, and since then the stock has gone up more than 80%, and that one is still a great stock to own for the coming 3 to 5 years, but I would avoid MP Materials. The second stock is mining uranium, and that one is called Anchor Energy. What's so special about this company is that they're using a low-cost ISR technology. It's cheaper, faster, and much cleaner than traditional digging. They own two of the most important ISR hubs in America. They are proven, permitted, and already sending uranium to the market. And it can take years to get a permit and get production ready. So that's massive. There's one bigger player in the market, which is called Uranium Energy Corp. But that stock has already surged a ton. It's still a nice alternative to diversify, but because Anchor Energy is a small to mid-tier player in this industry, it has much more room to grow. And I'm projecting that this stock can surge up to 700% in the coming 3 to 5 years. And by the way, this is the hidden gem of this sector. The first stock is a lithium miner, and that one is called LAC. LAC owns Thacker Pass in Nevada, which is the single largest known lithium resource on the planet. General Motors didn't just sign a deal with them, they invested nearly $1 billion to ensure they get lithium, and the US government has stepped in with a $2.26 billion loan and a 5% ownership. So Thacker Pass is officially a national security asset, and the great thing is they have a low cost production. Because they're refining lithium on site in Nevada, they save massive amount of logistics, which is absolutely massive. And lithium prices bottomed in 2025, and you can already see that it's starting to surge. And if we look at my Excel sheet, I'm forecasting that this one can surge up to 500% within 5 years. And that is why it deserves a place in my portfolio. The fourth stock is the best gold miner, at least in my opinion, and it's called B2 Gold. They just achieved commercial production of the Goose mine in Canada that is expected to pump 250,000 ounces of gold in 2026 alone. On top of that, this stock is a strong dividend payer and have a fortress-like balance sheet with over $330 million in cash. And B2 Gold is a direct beneficiary of every dollar gold rises. And the final and most important thing, the stock is undervalued. It's trading at a PE ratio of 33, a price to sales ratio of 2.9. If you look at all their competitors, that's much cheaper. And they're expecting that their EPS will surge 2000% and their revenues 130%, which is equal to all their peers as you see over here. But the great thing is you're getting it for a price to sales ratio that's 2 and for some even 3 times cheaper. And in my Excel sheet, I'm also forecasting that this stock can surge up to 300% within 5 years, and on top of that, pay dividends. The final mining company is actually a deep sea miner, and they are also going after rare earths, but this time with nodules on the ocean floor that are packed with nickel, cobalt, and copper, which are all crucial right now. And that is why Donald Trump sent the executive order specifically to advance the deep sea mining industry. So this company has right now the political green light to move at lightning speed. And in my Excel sheet, I'm forecasting that this stock can surge up to 750% within the coming 5 years. So really put these mining stocks on your radar. I'm not a financial financial advisor, so I can't tell you to buy these stocks, but all I can say is that I do own them, and I think it's still a great entry point. And now we're moving towards 3 stocks in another very hot sector lately, and that is space. The first company I'm buying right now, and that one is called SIDU Space. The stock price dipped pretty significantly lately, and that is offering you a perfect opportunity to start your position. SIDU has proved that they can build and launch satellites faster than almost anyone in the industry, and that's all thanks to their 3D printing technology. And they aren't just building satellites, they're learning how to build them cheaper, proving they can scale profitably, and they got a 35,000 square foot factory ready to go. SIDU's satellites use the same advanced AI chips found in high-end robotics, which is called NVIDIA Orin, to process data in space. Apart from that, SIDU was selected by the Missile Defense Agency to help build the Golden Dome. Through a massive partnership with Lone Star Data Holdings, SIDU is building the first air-gapped data center storage in space. And now to top it off, with a potential SpaceX IPO in 2026, the world is about to realize how valuable space companies have become. Wall Street analysts have a price target over $10 per share. They are right now trading at a price to sales ratio of 20, which is a lot cheaper compared to Rocket Lab and Red Cat Holdings, which are other space stocks. But look at this, they're expecting that their EPS will surge by 82% and their revenues by 30%. And these are massive numbers compared to their peers. And you can also see this in their EPS chart, it's just going up and to the right. And the same counts for their revenue chart. And if we take a look at my Excel sheet, SIDU's stock price has the potential to surge from $2.8 to $25 within 5 years, which is an 800% increase. And this is based off the company their own forecast and analysts their projections. So yeah, this Excel sheet is providing me with a very clear overview. In the coming days, I will be sharing this with the people in my Discord. So make sure to join that because this Excel sheet won't be free for a long time. The second space stock in my portfolio is called Redwire. I recommended this stock when it was $5 in this video. I even bought call options because the company had a bad quarter because of the government shutdown, and that's why a lot of government contracts were delayed. And this company is depending on a lot of government contracts, which I was also telling you guys in the video. And I predicted that as soon as the government shutdown would end, all the government contracts would flood in, and that's exactly what's happening. And the stock price has surged over 100%. It's now trading at around $12. But the question is it still a great buy? Well, I'm still holding it. I definitely reduced my positions. I took some profits, but it's still a relatively large position. And why is that? Because I'm making decisions based off my Excel sheet, which is showing me the potential upside. And what I'm seeing is that within 5 years, the stock price has the potential to surge 575%. So that's why it's still a mid-sized position in my portfolio, because this company is owning both the space infrastructure and the drones. The company is literally a one-stop shop for the modern military intelligence. This company is also being selected for the 151 billion missile defense shield. And just as a side quest, the company is commercializing space-grown medicines, creating a royalty-based revenue stream with massive upside. And this company has 90 million in liquidity to fund their aggressive expansion. They are trading at a price to sales ratio of 6, which is even cheaper than SIDU Space, and they're expected to grow their EPS 87% and their revenues 40%. And again, this is visible in their EPS chart and their revenue chart. So that is why this company deserves a decent spot in the portfolio. The final space stock is called ASTS Space Mobile. What this company basically does is deliver 5G internet through space directly to your cell phone, and they're 5 years ahead to their closest competition. This company has 3,500 patents. On top of that, they have more than 50 telecom partnerships, and they're projecting to generate $5 billion in revenues annually by 2030. And that's exactly what you saw in my calculations. And by the way, I'm not inventing these numbers. These are coming from analysts and the company their own guidance. Furthermore, they have a very strong balance sheet with $870 million in cash. And even after the recent run, I'm still forecasting that this stock has the potential to surge 450% within the next 5 years. But if you watched this video from a couple of months ago, you would have been already up 100% plus. So make sure you're subscribed to the channel so you're not missing any future videos. Now we're moving towards the 3 best stocks in the fintech/financial sector. The first stock is called Pagaya Technologies, and this stock is getting a lot of attention lately from the retailers, and I can tell you that's for a reason. Because Pagaya doesn't compete with the banks, it actually helps them. They're approving 30% more customers from big companies like US Bank and actually SoFi by using high-tech AI that is a lot smarter than old-school credit scores. And every time someone applies, their AI gets smarter. And this has created a massive wall that competitors can't compete with. They started with personal loans, but now they're conquering the $600 billion car loan market and the rapidly growing shop now and pay later sector. If you look at their price to sales ratio, they're only trading at a 1.5 price to sales ratio. That's extremely cheap for a software company. There are in total 10 analysts with an average price target of $40, while right now the stock price is trading at $19. Now if you look at their future growth, they're projecting that the EPS will surge by 330%, and they are projecting that the revenues will increase by 24% the coming 12 months. And all this is visible in their EPS chart and revenue chart. It's just going up and to the right. In my Excel sheet, I'm forecasting that the stock can surge up to 670% within 5 years. And that is why it deserves a spot in this portfolio. The second stock in the fintech sector that made the portfolio is called Nubank. This is one of the world's largest digital banks with 127 million customers. To put that in perspective, more than half of the adults in Brazil use Nubank. The great thing about this company is that it costs Nubank only 90 cents a month to serve a customer, while traditional banks often spend 7 to 8 times that amount. In January 2026, this company received the green light from US regulators to start setting up banks in the United States, and that is a huge milestone that very few fintech companies have ever achieved. They're trading at a PE ratio of 36, which looks quite expensive, but if you look at their EPS forecast, they're expected to grow their EPS 63% the coming year, and their revenues 50%. And that is visible in their EPS chart and also their revenue chart. If we look at the Excel sheet, I'm expecting that Nu will surge 270% within 5 years, which are not crazy numbers like some companies before, but this company is a much safer pick. The final and the hidden gem in this fintech sector of the portfolio is called Better Home and Finance, and it's now down more than 66% from its all-time highs. The market thinks it's just one other mortgage lender, which is struggling with the high rates. But what really matters is that the CEO is buying stock, the company is buying stock, and smart money is in. And the numbers and data is backing that up. They have a secret weapon, which is their technology, which is basically the Amazon Web Services for mortgages. On top of that, they have an AI, which is called Bessie, that is handling 700,000 phone calls every quarter. She doesn't sleep, she doesn't take breaks, and she closes loans faster than humans can. This tech allows them to offer one-day mortgages, which is a superpower in the real estate market. And the beautiful thing is that BETR doesn't only sell mortgages to consumers, but they're also selling their technology to other banks. They just signed a partnership with the top 5 US personal finance app, and they got 50 million users, and that is basically 50 million potential customers with zero marketing cost. This is their EPS chart, and this is their revenue chart. It's just going up and to the right. They're trading at a price to sales ratio of 3, even though they're growing their revenues at massive double digits for multiple years. And that is why I'm forecasting that this stock can surge up to 900% in less than 5 years. Next up, we got the software sector, and this portfolio only got 2 software stocks, despite the massive dip all the software stocks are witnessing because of the fear of AI replacing them. And one of the 2 software stocks that made the portfolio is called ZETA Global Holdings. This stock is down 60% from its all-time highs in 2024. And what's so special about this company is that for 20 years, the internet has ranked cookies, which were tracking files that were following you around. But now Apple and Google have effectively killed the cookie to protect everyone's privacy. ZETA saw this coming 15 years ago. And instead of cookies, they built a proprietary database of 235 million real people. This means while other advertisers are going blind, ZETA has 10 out of 10 vision. They know who the customer is, what they want, and when they are ready to buy. And the company bought back $100 million of their own stock. And on top of all this, ZETA partners with the biggest names in tech, like AWS and Snowflake. ZETA was named Snowflake Partner of the Year because when big banks and retailers put their data in Snowflake, they use the ZETA's engine to activate it. The company right now is trading at a price to sales ratio of 3.7. Analysts are pretty bullish on this stock with an average price target of $30. And you can also see that over here, going from making 250 million to 450 million in less than 2 years. And if we look at the Excel sheet, I'm forecasting that ZETA can surge up to 400% in less than 5 years. Next up is the energy/battery sector, which contains 3 stocks in this portfolio. And the first one is called Dragonfly Energy Holdings. This is a lithium battery technology and energy storage company where they're manufacturing and selling deep cycle lithium ion batteries. And the beautiful thing is that this company cleaned its house, reducing debt by 80% and raising 90 million to fund its future. Standard integration with premium brands like Airstream provides a massive stable revenue floor. This is a multi-billion-dollar market that is just beginning to convert to lithium. This is right now a $3.2 stock. $20 is basically their recent all-time high, and that was back in October of 2025. And since their all-time highs, this stock is down more than 70%, and it's trading at a price to sales ratio of 0.3. There are in total 2 analysts that have price targets of $18 up to $22, which is a 480% increase, and the most bullish analyst has a 600% increase, which honestly sounds too good to be true. They're expected to grow their EPS 100%, and their revenues only 6%. This is how their EPS chart looks. It looks amazing. And this is how their revenue chart looks. Also phenomenal. I'm projecting that this company can surge up to 2000% in the coming 3 years, and in the coming 5 years, it could surge up to 2800%. But I ranked it with pretty high risk. But if you want to see me go more in depth on these stocks, subscribe to the channel channel and comment your stock below or in the Discord, and then I might talk about it in my next video. The next stock with a lot of potential is called GRRR. So GRRR commercializes renewable fuels and sustained chemical products that are aimed at reducing reliance on traditional fossil fuels and lowering carbon emissions. By shifting its focus to the GRRR North Dakota site, the company has bypassed major infrastructure bottlenecks. The company has secured and maintained a $1.46 billion conditional loan commitment, which was extended under the current administration. It's right now a $2 stock. They're trading at a price to sales ratio of 4. There are 4 analysts with an average price target of 170% increase, and you have some analysts that think that the stock price will surge 600%. And remember, price targets are for the coming 12 months, so that's crazy. They're projected to grow their EPS 66% and their revenues 677%. And this is visible in their EPS chart. It's going in the right direction, and same for their revenue chart. And I'm forecasting that the stock price of this company can surge up to 3000% in the coming 5 years, but it obviously comes with a little bit higher risk, which is obviously execution risk and some more breakthroughs. So this is a very interesting energy play which is not really talked about. The third battery/energy stock is called EOS. So what this company does is revolutionizing the battery industry by making zinc batteries instead of lithium batteries, which have 2 times the energy density. These batteries are much safer in terms of catching fire and in terms of chemical substances. Furthermore, they are 100% recyclable, non-toxic, and they can operate in extreme temperatures, which is needed for a lot of businesses. It almost sounds fake how good this technology is, but the story will get even better. But first, smash the like button, I would truly appreciate that. Alright, so their zinc batteries don't need any cooling systems, which you do need in lithium batteries, and because of this, they can be produced much cheaper. On top of that, it's not a rare earth mineral, and the products of this company is 90% made in the US. This company is receiving 90 million annually in subsidies. On top of that, they got a 400 million loan from the government. EOS also got 650 million in backlog, and this company is 4 years ahead of competition and is very hard to replicate. You will need years of research and experience. According to my Excel sheet, I'm forecasting that the stock has the potential to surge 560% in the coming 5 years, and that is why it's a must own for the portfolio. Next up is the data center sector, and last year I made a ton of money on data centers, mainly with iron and APLD, but from now on I don't think they will be the big gainers. So for my 2026 portfolio, I only got 4 data center companies, and the first one that made it in the portfolio is called DUOT Technologies. And what they're doing is that they're dropping mini data centers the size of a parking spot into small towns and schools, and this gives hospitals and students the same high-speed internet and AI power that big cities have without long delays. And now that the world is running out of electricity to power the AI boom, DUOT Technology manages mobile gas turbines that can be set up in weeks to provide a very fast power solution, and that is bypassing the years of waiting for traditional power grids. And this isn't just a story, the money is showing up. Revenue doubled this past year, and the company has over 35 million in the bank with 0 debt. The stock price has already surged up to 56% the last year, and I'm talking about this stock since my second video on this channel. They're trading at a price to sales ratio of 9, and what's so crazy is that the earnings per share is forecasted to grow by basically 100% the upcoming 12 months, and they're expecting that their revenues will surge by 584%, while trading only at the price to sales ratio of 10. This is all visible in their EPS chart, expecting to have a positive EPS in the third quarter of 2026, and the same is visible in their revenue chart. And if we're looking at my Excel sheet, I'm forecasting that this stock could surge up to 700% within 5 years. So yeah, this stock definitely deserves a spot in my portfolio. And that brings us to the second data center stock that managed to get into the stock portfolio, and that one is called BTDR, BTDR Technologies. This is a Bitcoin miner that is transitioning into a data center company, and what's making this company so special is that it's a landlord of electricity. They have secured 3 gigawatts of power, enough to light up millions of homes, and the great thing is they aren't tied to one country. They have massive sites in the US, Norway and Bhutan. Furthermore, most mining companies have to buy their equipment from outside suppliers. BTDR makes its own equipment. They design the chips and build the machines. This makes them more efficient and gives them higher profit. Great thing is that their newest chips are among the most energy efficient, and while Bitcoin is their foundation, AI is their growth engine. If they dedicate just a small portion of their power to AI, they could generate over $2 billion in new revenue by the end of 2026. To top it off, the company is sitting on 450 million in cash. So yeah, they basically have a war chest needed to build out these massive data centers without running out of money. The company right now is down 30% the last year, which is absolutely crazy, and it's down almost 50% from its all-time highs. It's trading at a price to sales ratio of 6, which is a lot cheaper compared to iron, Cypher and APLD. There are 12 analysts covering the stock with an average price target of 120% increase and some with a 200% 100% increase. They're expecting that their earnings per share will surge 100% the coming 12 months, and their revenues 200%. These are much higher growth rates compared to all these other companies, and you can literally see it in their EPS chart and in their revenue chart. It looks absolutely amazing. People are really sleeping on this stock, but yeah, only time will tell. But in my Excel sheet, I'm forecasting that the stock can surge up to 800% in less than 5 years, and this is my favorite one out of the data centers. Next up, we got Gorilla Technologies, and that one is probably my third favorite data center stock behind BTDR and DUOT Technologies, and that is because they're a big data center player in Southeast Asia. They already signed a massive $1.4 billion contract to build AI data centers across Southeast Asia. This single deal is worth nearly 5 times the company's entire market value. Furthermore, the company has over $110 million in cash. Countries like Thailand, Malaysia, and Indonesia don't want to rely on US tech giants for their national security, and Gorilla is their trusted partner. Unlike firms that only make software, Gorilla's tech is used to the real world, to catch cyber criminals, to help ports manage traffic, and even to protect the Amazon rainforest using high-tech sensors. They have 29 patents that prove that their technology is unique and hard to copy. And to top it off, the company has authorized $20 million to buy back its own shares, and just like BETR Technologies, Gorilla Technology has done nothing the last year. It's trading at a price to sales ratio of 2.6, and there are 3 analysts covering this stock with massive price targets up to $40. It's now trading at $14. And just like BTDR, I'm forecasting that this stock can surge up to 1,100% in less than 5 years, which is a crazy call, but this company is facing short seller allegations, and BTDR also, by the way, because the short sellers are thinking that these companies are faking their backlog, but that is short-term noise, which is giving you a very attractive entry point in these companies. The final data center in this portfolio is called TSSI, and that is because they're solving a massive problem. Companies can buy chips, but they can't deploy them fast enough due to complexity. AI racks now consume 100 kilowatts of power, and you can't just plug these in. They are required engineering, thermal validation, and specialized plumbing. TSSI is the bridge between the silicon factory, Nvidia, and the data center. And on top of that, they got a fortress balance sheet with $70 million in cash. And don't forget, this company is trading at a massive discount compared to growth peers. It's trading at a PE ratio of 56 and a price to sales ratio of 1.1. And I'm forecasting that this stock can surge up to 333% in the upcoming 5 years. The next sector is stocks that sell to consumers. And the first one that made it into the portfolio is called e.l.f. Beauty. And the beautiful thing is that this company sells a $14 version of a $15 luxury product. It's right now the #1 brand for the next generation of spenders. They own TikTok and are integrated into social media culture like no other brand. They pretty recently made the Rode acquisition, which is Hailey Bieber's brand, the wife of Justin Bieber. And they recently had their biggest launch yet, and this proves that e.l.f. can win the luxury space too. The United States is just the beginning. Huge opportunities remain in Europe, Asia, where the brand is just starting to arrive. And to top it off, they have high margins, 71%. If you look over the last 3 years, the stock has done basically nothing, up 20%. For the last year, it's down 15%. It's trading at a price to sales ratio of 3.6. Their earnings per share is forecasted to do nothing this upcoming year, which is quite positive, knowing that they had to deal with all the tariffs from China. And their revenues is forecasted to grow 30%. There's no other beauty company growing with these growth rates. Here you see the EPS chart, and here you see the revenue chart. It's definitely going in the right direction. e.l.f. Beauty won't be a multi-bagger, but I'm still projecting that it can give you a 180% return on your investment. The second stock in the consumer sector does have a lot more upside, and that one is called QXO. This belongs more in the housing sector, but I didn't want to make an entire separate sector for just QXO. The beautiful thing about this stock is that Brad Jacobs, the CEO, has built 7 multi-billion-dollar companies from scratch, and he's now focusing at QXO. He's put $900 million of his own money on the line because he sees the biggest opportunity yet. It's basically the Amazon of building materials, because right now the building products industry is still old-fashioned and fragmented, with 20,000 distributors across the United States and Europe, and QXO is trying to use AI and advanced tech to modernize this $800 billion sector, making it easier for contractors to order, track deliveries, and manage their business. Apart from that, they have $10 billion in cash, and they're ready to buy up more companies. And last but not least, they have ambitious long-term goals, aiming at $50 billion in annual revenue within a decade. They're trading at a price to sales ratio of 3.5. Analysts have pretty bullish price targets. They're expected to grow their revenues 14,000%, but their earnings per share is expected to decline by 30%. And because of this massive growth, I'm forecasting that the company has the potential to surge 600% within the coming 5 years. And it's just a great play on the housing markets, especially if you're expecting rate cuts. And that makes this my hidden gem for the consumer stocks. And that brings us to the third stock in the consumer sector, and that one is is called FUBO. Look at this, going down 20% after earnings, while they beat their numbers, and because of what? No guidance? It's now trading so extremely cheap, so that offers a perfect entry point in this stock. Disney now owns 70% of FUBO, and that gives them a big brother for protection and massive scale. And FUBO sued the big guys, named Venue from Disney, and they won the case, leading into a huge cash settlement of $220 million in cash. And analysts think it could double in the next 12 months. And I'm on the side of the analysts. I'm also projecting that the stock price could surge 300% within the coming 5 years, but I still think these are conservative numbers. The last two consumer stocks are actually Mag 7 stocks. Those are Meta and Amazon. These won't give you insane returns. I'm only projecting a 150% increase within the coming 5 years, but everyone should know their business model, so that's why I'm going over to the final sector, and I'm calling this the chip/AI infrastructure sector, which contains 4 stocks, and I want to start with SMCI, Super Microcomputers. This stock is down 70% from its all-time highs back in 2024, and is now trading under $30. They just released their earnings report, and it was absolutely massive. A 20% beat on their EPS, and a 20% beat on their revenues. This stock shouldn't be up only 5% in the after hours, but what's more important than the price action is the story behind SMCI. Traditional service companies build servers similar to cars, because if you want to change the engine, you have to wait a year for the new model, and the same counts for servers, and that is much too slow for AI, and SMCI provides the solution. They build servers like Lego sets. They make interchangeable racks, cooling, power, and chips. And why it matters, when a new AI chip comes out, Supermicro can snap together a new design in weeks. Competitors take months. In the AI race, being first means everything, and Supermicro computer is always first. The second point is, liquid cooling is the new standard. It's green and it's cheap, and SMCI is the world leader in liquid cooling. They run pipes of cold liquid right over the chips, and this cuts electricity costs by 40%. For big data centers, that saves millions of dollars. So it's not just green for the planet, it puts money back into the customer's pocket. They're growing faster than almost any other hardware company in the world, and despite this explosive growth, the stock is trading at a massive discount. And this is because some temporary paperwork delays, which are being fixed. So right now it's like finding a Ferrari that is selling for a Toyota because it has a flat tire, and flat tires can be fixed. There are 17 analysts covering the stock with an average price target of $48, which is a 60% increase, and I'm forecasting that this stock can surge at least 300% within the coming 5 years, and these are pretty conservative numbers. The second chip stock that made it in this portfolio is called Valens Semiconductor. This is a very interesting stock. So as vehicles evolve into autonomous supercomputers, the volume of data generated by sensors such as LiDAR or cameras for Tesla is exploding. Valens provides the nervous system, the high-speed, zero-latency connectivity that allows the vehicle brain to make life-saving decisions. And Valens has a patent on signal processing technology, enabling error-free data transmission over low-cost, lighter-weight cables, and this technical advantage was validated in late 2025. Valens secured 3 landmark designs with major European original equipment manufacturers, paving the way for mass adoption, with a fortress balance sheet of 93 million and 0 debt. And it has a massive addressable market, and it's right now trading at a valuation that has not priced in the steep revenue ramp expected from 2026 to 2029. If you're looking at the EPS chart, it's basically neutral because they still have to ramp their production. Their revenue is going up and to the right. There are 4 analysts covering this stock, with the average price target of 150% increase and the most bullish price target at 240% increase within 12 months. So I'm not the only one that's bullish on the stock, but if you look at the stock price chart, it's not yet gaining a lot of attention, and that is the secret behind this company. This is the right moment to get in, and in my Excel sheet I'm forecasting that this stock can surge up to 1250% in the upcoming 5 years, and that is why I must put it in this portfolio, and that makes this my hidden gem of this sector. And last but not least, we got AMD. They always say save the best for last. This one won't particularly give you the most returns, but it's probably one of the safest growth stocks that in my Excel sheet is projected to surge at least 260% the coming 5 years, and these are pretty conservative numbers. But AMD is now a core partner for OpenAI, deploying 6 gigawatts of GPU power. The beautiful thing is that AMD will be the first to launch 2 nanometer server CPUs in 2026. They have a target of $100 billion in data center revenues by 2030. So the company is forecasting that their profits will triple by the end of the decade. And once the 450 series comes online in the second half of the year, then the stock will hit at least $500 before year end. To reward the people that watch until this point, I posted my 10 best biotech and pharma stocks in my Discord because I didn't want to make this video extremely long, but I'm extremely bullish on those. And just smash the like button for me This was a massive video for me to make. And only subscribe if you want to see more content. See you guys in the next one.